Welcome to Trading Lounge and the Asian Report. We'll be looking at the ASX 200 and also the Nikkei as well. And in this case here, we talked about this over the last few sessions as well, that we're looking at a wave 4 pullback here of intermediate degree to pull back to the minor wave here of 1 lesser degree, and also in this box here is the 38.2% retracement level. We know that if waves 1 and 2 are simple, then we know that wave 4s is likely to be complex. So in this minor wave here, we can see we've got a simple A, B and C, and then the guideline of alternation in the next correction would be a complex one if we've got a simple one here. So we've got this complex correction as wave 4 here. So this blue wave one here of intermediate degree, this was also a simple correction of wave 1 and 2 as well. So we should really expect this to be a little bit complicated in here. So yeah, most simple corrections in wave 2 are normally an A and a B and a C, a zigzag as they call them. Now when we get to wave 4s here, we can expect well, things like this. We can expect triangle patterns in wave 4s. We can expect double zigzags. There's 12 different types of corrections, and pretty much all of them can occur in wave 4 here. Now, the thing with it is that once this first leg down is completed, actually matured and completed, then we can break those 12 corrections down into about 6 corrections. And the reason for that is because what we need to understand is we need to understand if we're going to get 3 waves down for the first leg, or we're going to get 1, 2, 3, 4 and 5 here. So they will be the 2 things that we'll be looking at here as such. That's what we really need to work out here. That's what we need to see before we can work out the rest of the correction. Because if we get 5 waves down here, then it becomes quite simple. We get an A and a B and a C back up to the 62%, 61.8%, 62, and then we'll get another 5 waves down from that point, okay? And we can expect this trend line to be breached as well through here, which I can, it's slipped out, I can readjust that. So if we get 5 waves down, then we're going to get 3 back up and then another 5 down, okay? But we should stay within this space here of this wave 4 here. So there's pretty good support there at that point. Now, if we get 3 waves down, then that can get a bit more complicated at that stage. It means we can get an expanded flat, a regular flat, we could get a triangle, so it gets a little bit complicated at that point. So what we'll do is, if we only get 3 down here, then I'll draw them out and I'll explain to you, which ones that we need to put on the table to weed through, so to speak. Our first step really though is to just be a little bit patient, because the move down here so far is in 3 waves. Go to the daily chart now to draw a few little things out here. So one of the things here is that when the US market started to when the US markets found its top and started to move down, it started from this point here. Okay, so we're before that we've already started over here in this particular case. So with the US markets, we're looking for 5 waves down in this particular structure. So the US markets will have 5 waves down. So they will have the 1, the 2, the 3, they're down here at the 3rd now. They're going to be doing the 4th now. Then they'll have the 5th wave here. And then once they've done that, they'll have their A wave, B wave and C wave back up. And then they'll have another 5 waves here. So we have to ask ourselves, are we going to be doing exactly the same? Will we start to tune in with them now? And that's a real possibility, because of that strong move it's had down through here over the last few sessions, and the same here, all the markets tend to tune in from that point. So you know, we may only get 3 waves in this first leg down here. As an A and a B and a C wave here, and then we'll move up with the US here in 3 waves as such, and then have 5 waves coming down here again as well. So if the US has 5 waves down here, then we're highly likely to have our 5 waves down here on this side too, when the US has its 5 waves coming down as such. So there's a little bit to work out, but in terms of holding portfolios and shares and so on and so on, then consider this more of a buying opportunity than a selling opportunity. Okay, yeah, so that's sort of where we're sort of at the moment with this here. So let's just take a closer look at this, you know, this little pattern in here. But I think it's, if you're holding stocks out there, then this is important where to go. And this is, before I go into the smaller picture here, we'll just look at the Nikkei here. Most of the Asian markets are all doing much the same as well. So we're kind of expecting all the markets to pull back to their wave 4 of one lesser degree here. So this is also a little bit like the US markets here. We're looking for a little wave 4 up to here somewhere, then a wave 5 to come down here, and then 3 waves for the B wave. The B wave's always got 3 waves in it, and that will be 5 waves, 3 waves, and 5 waves. And the C wave always has 5 waves in it, except in a triangle. So we can look for 5 waves coming down into this space here. So yes, with all the global markets, once this first leg here is finished, then we know pretty much what we can be looking for after that. But we just need to know if we've got 3 waves or 5 waves in that sequence. So coming back to the ASX 200 here. One of the things, while we're here, this is moving quite quickly here, so we can look for, from the top here, if there was going to be any 4th wave pulling back up, that's where it would pull back up to right here, right now, because that's the 38.2% retracement level here. So if there was going to be, if we looked at this, if we looked at this down for 1 here, back for 2 here, down for 3 here, and then back for 4 here, that's where it would come to here. That would be the 38.2% retracement level here, and then we would have wave 5 coming down here. If it moves back up further than that, then we need to look at the A wave being completed down here. We need to be focused on the B wave now, which will pull back up to supply levels, so back up to 6,000, the 61.8%. So it'll come back up into this space here, higher here. The other point too, I think I'll just keep going with this. So that's the daily chart. I'll just cut straight into the hourly chart here, and let me just organize this a little bit. So as I mentioned, we've started up here. So I've never known if the first move down is an A wave or wave 1, and then we've got wave B or wave 2 here. So I don't know which one of these is going to be in that instance there. And the wave 4 coming back up here, we always look at the 38.2% retracement level, but it's also important that it can move past that. I mean, that's 38 is 40%, and it normally moves back to the wave 4 of 1 lesser degree, which would be here. So, but it can move past that a bit, so we just need to be a little bit mindful of that as well. So, yeah, so coming down through here, this long stretch down here, we can see that it's part of all the same family, because this family of trends here is different, isn't it? So we can look at all of this as being wave 1 and 2 here, and then down for 3 here. And then we've got this ABC here for wave 4, and then we have 5 waves in this structure here. So I can call this wave 3 here, and then we can look at this going back to the A wave, a B wave in here, and up for the C wave here for wave 4, finishing just about where it is, and we'll take a closer look at that in a moment. But at the same time, as I mentioned, I won't know just yet if it's wave 3 or wave C. If it's wave C, then that's the A wave in place. Otherwise, we need one more leg coming down down here after this is moved up through here as wave 3, wave 4, and wave 5 coming down to 5-7 area here. 5-8 here is the most important number in this area here, being the minor level here. 900 is important, 700 is important, but this is much more important here. So what we'll do now is we'll go into the tick chart here and have a look at how this market's moving up through here. So in the US markets, we're looking at this because this is what this is doing, bouncing back up here. We're looking at this being a wave 4 in the US market. So it's possible that it's part of this wave 4 here. So we won't know just yet. But let's just go into the tick chart and have a look at how that's moving. But it's just important to know if we've got wave C, 3 or C here, and so on. So tick chart. Okay, so I was just looking at something here, so that's that, and the way that I've got that is just going to explain this here. It just takes me a while to get my head around some of this stuff, but the move down, nope, that's not right either. I think it's 1, 2, 3. Well, that has to be on that side of the fence, so that's got to be here. So then that would leave that. It's still not right, is it? It'd have to be like that, because we need to look at this. That's up in 3 waves here, so we need to look at that as an A and a B and 1 and 2 and 3 and 4 and 5 here. But there's just 3 waves in here that bothers me a little bit. But we've either got, sometimes when they're all quite clear, it's good, but this looks like it's still got further to go up. We'll have to look at this as we'll need to look at this as you can start to see the 5 waves up there. Let's just grab a few of those. To look at that. Okay, there's a couple of still, it's just not, I just probably need to go into a 20 tick, and I don't want to burn up too much time. So it is possible to see this up as wave 1 here, and wave 2 in here, wave 3 here, wave 4 here, and this here, this here, you can see that it was strong here and it's tiring here. So it's quite possible that this is wave 5 here. If that's not the case, like this here is 1 and 2 and 3 and 4, then we're going to get one more wave up. So that means we need to look at this as up here, and a wave 4 to come in here, a wave 3 here, wave 2 here, wave 1 here, and this here. I need to study this a little bit more in here. But I'm just trying to get some sort of perspective on this here. That's the 38.2% retracement level, our target area here. But like I said, when markets are traveling quite wildly like this, then they'll go past their points. So we could end up higher here, but that's still not the problem. So today we'll either be looking at a little wave 4 here that can pull back to the 5-9 area here. 5-9 area here, and then have one more little move up, into this space and then fold over from that. I'll save that. Or we could have the 5 waves in already as 1 and 2 and 3 and 4 here, and then up for 5 here. But either way, one way to look at this, if you're going to short the market today, then you want the 5-9 here as the retested resistance, this number here. And if that becomes the retested, because as a wave 4, that shouldn't come back below that. Well, it could do, it could just spike below it, but what you're looking for in a retest, I can't draw on this side of the price over here, so I'll have to do it here. So let's just say that the market came down to the 5-9 again. Of course, it's going to bounce. And if you see it bounce in 3 waves, well, then you know that you're going to go down further. Otherwise, you have to wait for it to move down and then retest it. And then you then you put your order 1 point below that low there. And then if that's breached, then it's failed the retest, and it's proven to you that it's weak because it's taken the low out, and you're on your way at that point. Because if it goes down at that point, then we're looking at a move down towards 5-7 area here, okay, which will be this wave 5 of A here. And then basically we'll know where we are from that point. So that would be the trade today for you guys as such. If the market, for whatever reasons, moves up to the 6,000 area here, then we know that this A wave is already in play over at the C wave here, so I can just move that text, copy that text. So if we get a move up to the 6,000, then we know that we're up at the 61.8% mark there. And there is a case for that too, and I think that I should just point that out. Just give me a second to find CBA here for a moment. So the banking sector, yes, it's broken down a little bit, but it hasn't smashed its possible positive count yet. So there's a CBA on the daily chart, and from this low here, we've got 5 waves up here. That's an A and a B and a C here, then 1 and 2 and 3, A, B, C for 4 and 5 for wave 1, and A and a B and a C for wave 2 here. It's wave 2 here, and then we've got wave 1, an A and a B and a C for wave 2, pulling back into the 61.8% mark here. So it could fail from here and move on further down, but and we will look at that when the time comes, and we'll look at it in something like there's 75, 76.50 would be 76. Look, but if this breaks down much further from here, and I can see that we're on a bearish track, then we're short on the banks anyway, because I knew that they'll be pulling back to, that's okay, but they haven't actually broken down yet. So if they do, we're already on them, but I don't want to forget about this positive count just because we're in negative territory. So if the banks get supported here, and push up and let's just for the first instance, let's just say they find support on the 80 here, then we need to be looking at going long from that point. We don't need to get the best price here, because even if we get onto 80, we'll still be looking at a move up to 90 here. And as I've mentioned before with this as well, when we look on the monthly chart here, we can quite easily see that from the low here, this wave 4 here from the GFC, we've got wave 1 and 2 here, and then wave 3 here and wave 4 here. And I was looking for 1 and 2 and going up into 3, 4 and 5 in 100 to finish this 5th wave off here. But once again, I don't know if this wave 4 is going to get more complicated and give us something over here as well. But I can see that this structure here in Elliott terms of 1 and 2, a nice strong 3rd wave, and a 4th wave is just not finished, so I don't know yet. I don't have any answers for this, but I can say at this point, the next time that the 80 here becomes support here and takes this top out here, or just gets support, then we'll be looking to go long from there. So if we're going to be looking to go short, then we can do that in in the banks, but basically we just need to see a bit more bearishness in these. So we're not on either side yet. Just we just need to stay open. All right, I think I'll just leave it at that. You kind of got the general picture of sort of where we are. If you're holding stock, for your portfolios, then we're still considering this whole move down as a fourth wave on the ASX 200. So consider it more of a buying opportunity, but we're not moving into buy just yet. We need to probably wait. We're not. It's not set up for that just yet. Alrighty, cheers.